The big news today, yes, inflation got better. The lowest it has been in 2 years. But if you believe the media, cost of living crisis is over.
There is optimism tonight that Australia is winning the fight against inflation.
The welcome plunge in inflation.
The inflation figure falls, and so do the chances of another interest rate rise next week.
But as always, let's look in the numbers behind the numbers. You see, there are a basket of goods which go into making up the inflation number. Some things, the prices have well and truly gone down. Others are still almost double the overall inflation number, which means the expectations of it getting better and better and better and better and better every month just told your horses. According to the 3 months that was the December quarter, the single biggest factor in inflation in the country was insurance and financial services. Now, this has been one of those issues that's been bubbling along as people try to reinsure their house, car, boat, whatever, is that the insurance premiums you're paying are way higher than they used to be. The average here, apparently, only about 8%. Now, increases in taxation on tobacco, as well as increased taxes on alcohol, mean that it is staying way above the number. And then, small irrelevant details are above the national inflation number, like housing, health, education, or, food and something to drink. But the reason I say that there should be a little caution, and again, we'll always take better over worse, no question, but the idea that it's all over, have a look at the month-by-month numbers, because obviously the December quarter is 3 months, average it out, you get the number that you get. But have a look at the numbers that were there in December alone. Now, remember, this was also a time when $800 million less was spent at the shops and more than 100,000 people lost a full-time job. Now, gas was well and truly above inflation. Now, the overall inflation's got a 4 figure in front of it, so everything above that is things like gas and household fuels, insurance, bread and cereal, that stuff you could avoid to pay. Rent's still way too high. Non-alcoholic beverages way too high. Food, and then again you get into the alcohol, tobacco, and then automotive fuel. Now, that interesting number about automotive fuel is that anyone who watches the prices certainly knows in places like Sydney and Melbourne there's been a big spike, like 20-cent spike in the past couple of days, so we'll obviously see where we are in a month and 2 months' time. But you see that most people believe that with the headline figure starting to go down, that automatically means that there's going to be no rises in interest rates. This seemed to be the overall thumping message that you got from much of the media. And that would be awesome. I hope that there are no further increases in interest rates. But don't forget, the Reserve Bank wants to get inflation somewhere between 2% and 3%. We're currently on our way to 4.5%. But the logic is right now that if the idea was that we were supposed to start feeling the pain, these numbers are starting to show that we are feeling the pain. And there's a reason that we can't have any more interest rate rises, which was, remember the last one, put another 1 million people into a thing called mortgage stress. Well, if there was going to be another interest rate rise to try to get us to the 2 to 3% band, and we are still not at 2 to 3%, well, that would push another 1.6 million people into a scenario where they may not have enough money to pay off their house, they may have to sell their house. And mortgage stress has been a major issue. In fact, in 2023, towards the end of it, more Australians were suffering mortgage stress than any other nation because we take very big loans out to pay very big prices for properties. And because your wages didn't increase by the 13 times that interest rates did, obviously it starts to hurt. But again, pay attention to what the Reserve Bank is thinking here. Every month, be it Philip Lowe or Michelle Bullock, they say where they want inflation to be is between 2 and 3%. If they start to see things are heading in that direction, do they not touch the brake or the accelerator and just naturally let it go? Or do they try to speed up getting to that 2 to 3%, which means they may well hit the brake, and that again is another interest rate rise? I would suggest, just not knowing how these people think, you've got to imagine the pressure will be on them to do nothing in their February meeting, as they did, of course, in their December meeting.